Hey everyone, Chris Guerin here at eLend. I wanted to talk to you a little bit about budgeting for buying a home, and our topic today are closing costs. So what are closing costs? I would tell any potential buyer to budget for 1 to 2% of the sales price of their property for these fees. Now what makes them up? The first are lender fees, or fees that you are charged by the lending institution to obtain a mortgage. Traditionally they're broken out by the appraisal, which is a report that's paid money that's paid directly to an appraiser. Their job is to go out to the home, make sure it's worth what you're buying it for, and that it's safe and marketable. Second is discount fees. If you choose to, you can pay discount fees, they're commonly referred to as points, to obtain a lower interest rate. This way you can get a lower payment if you pay a little bit more upfront as a cost to do so. There are also sometimes processing, commitment, or underwriting fees. There are also many times where you're charged junk fees. I think it's important that you take any loan estimate you get from a bank and use our loan estimate comparison tool to just make sure you're not getting charged any of these junk fees, which are additional costs that banks put on to, that pass along to you that really don't mean anything in terms of the long run. I would definitely check out our LE compare tool and make sure you're not paying those. Second piece is the settlement agent or your attorney, and sometimes they can be one and the same. The attorney basically, if you choose to utilize one, will negotiate your contract for you, make sure you're out of attorney review, and you pay a fee to that attorney to do that. They will also typically perform the settlement of your closing, which means at the day of closing, when you come with your check for whatever monies are due, they will accept that check and make sure everyone's paid. The seller's paid, the seller's mortgage company is paid, the realtors are paid, and make sure that there are no outstanding liens on the property. The settlement agent will provide a title insurance policy to confirm that. An insurance policy basically states that there are no outstanding liens on the property. You, as the owner of the home, are the only one on title of the property and on the deed, and the new mortgage is the only lien on the property. Outside of that, if they make a mistake, they use this insurance policy to make it right and pay off that lien on your behalf. State recording or transfer fees. Depending on where you live, your state, county, or city may require you to pay a fee to re-record the new deed or transfer ownership of one property from one to another on your home. These vary significantly from state to state, so it's important to give us a call and we can help talk you through what these fees might be. I wanted to talk briefly about home inspection. eLend does not require you to have a home inspection on your home. The appraisal is our eyes and ears on that property. However, I strongly encourage you, depending on what you're buying, to get a home inspection. The inspector will go out and make sure if there's any repairs or costs that might come up in the future that you're aware of them. Once again, not a requirement, but something I definitely recommend. I hope you find this helpful. Please follow us on our YouTube channel or come back to us on elend.com to get some more videos or some more information on this. Our LE comparison tool is also on our website if you want to make sure you're not having to pay junk fees. Have a great day.